really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right. EDGEFINDER
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our EDGEFINDER summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. All right, guys, welcome back to another live stream. Hope you're doing well. We got new intro vibey music here. Hopefully you can hear that. I think the screen audio should be turned on. Anyways, welcome back. Another week in the markets and another huge one. I know I say it every single week, it feels like, but this week really is really important to the markets. This week we've got CPI, which is the inflation statistics coming out of the US. We also have the producer price index on Friday. It is a very, very, very big week. Because, you know, as we close the door on the conversation about whether or not the job market data is cooling, it's pretty clear that it is. We now have the next debate on whether or not, you know, inflation's also going to start coming down materially. There is an ongoing debate for that because it depends which statistic you look at. If you look at the producer price index, it's been pretty good in terms of its cooling overall. But if you look at the CPI, it's still in the 3s. But then you look at the core PCE number, which is what the Fed likes to look at. It's very closely tracking kind of consumer specific prices. And that's been looking pretty good. So inflation is a mixed bag. It's a debatable topic, as most things are. This is the debating year. It's an election year. Everybody's going to debate everything. And so, you know, as we get closer to Thursday, the market is now gearing up to see whether or not inflation is seriously going to kind of reel it in alongside this jobs data, or is it not? Jobs data, I'm sorry, we'll come back to jobs data, but in terms of inflation statistics this week, if we go to this week and we filter for that, we go down to Thursday. So on Thursday, did I speak wrong? Did I go to the wrong week? Hold on. Next week, this week. Okay, so Thursday, the consumer price index is forecasted to come down to 3.1%. which would be a really good step in the right direction in terms of the inflation fight, right? The fight to get inflation back down to 2% that the Fed's been on for a number of years now. If you get some progress on that, the market's likely going to react. You're probably going to see gold continue to push higher. You would see stocks do well. Arguably, you would see some other areas of the stock market maybe start to participate off of the prospect of rate cuts. If we're going to get rate cuts this year, inflation's got to come in light. And the Fed Watch tool is forecasting for the first probable hike is going to be in September. Now, is that a certainty that it's going to be in September? No, things can change between now and then. That could change the story. But probabilities wise, market is thinking, the bond market specifically is thinking that we'll get our first rate cut in September. And the stock market has celebrated this. Here's a look at the NASDAQ. The NASDAQ is screaming higher here. Still, it's had just a remarkable year. The Dow Jones even starting to participate a little bit, and the S&P 500 doing just fine here. Speaking of the S&P 500, up 0.25% today. So stocks are higher on the day and on the week and on the month and on the year, and stocks are really, really strong. Here's the thing. What somebody asked me today on my Instagram, they said, Nick, what would be the catalyst for a reversal or for a larger scale pullback? And I'll tell you what that would be. Potentially, it could be CPI this week, right? Now, I'm not saying that that's what I think is going to happen. I am bullish on the market. I have positions long on technology, TLT, gold. I think rate cuts this year are attainable. We're starting to see stuff really show up in the other side of the mandate, right? The dual mandate of the Fed is to keep prices stable, inflation, and keep maximum employment. And last week we got some employment data, which I think we should take a minute or two to go through together. So if we take a look at jobs data, we look at NFP. NFP last week came in at 206,000 jobs added. Pretty strong. Not super weak, not super remarkable, but pretty strong. But here's where things were a little weaker. If you take a look at the yellow line, and the yellow line on the EDGEFINDER allows us to look at revisions. We found it very important that if you're going to understand fundamentals, what you need to understand also about a lot of data is that each report usually comes with some revisions to the previous report. Economic data is inherently very, very complex and very difficult to showcase. And so they have these revisions that come in month by month. And what we can see here is that the last jobs data, this 272,000 number, which was a very strong jobs read, what happened is we actually saw the revision come down on that number to just 218,000 jobs. So that's a pretty significant difference. And so what the market kind of did on Friday was it said, oh, yeah, that is materially weakening jobs data. Now, it's not like crashing jobs data, but it is certainly not the same, numbers that we were seeing a year ago, right? So the jobs market is slowing down, and slowing down, you have to see, at least this is traditional kind of financial thinking, is in order for you to get inflation down, you need to see some slowing, not a crash, because that's terrible for everything, a slowing in hiring. And so we've started to see that. Another thing that was really good news is look at this wage growth. Wage growth is a huge component, the rate at which people are getting increases on their pay, right? Which obviously is good for the individual, and who doesn't want to raise. But who doesn't want to raise is the general public, which hurts when everyone's getting raises, because what happens is all the prices go up to match those raises, right? So what we've seen here is we've seen a nice cooling in wage growth, okay? And obviously, again, it depends who you ask. Some people would be not happy with that, but other people would be like, okay, that's going to help with the inflation problem. We all hate inflation, right? Nobody likes going to the store and the price shocks you compared to the last year, right? So this wage growth is a very promising thing. We're seeing it in the threes officially, and this is a huge component to inflation is people, the wage growth rate. You still want people to get raises, but you don't want them to get, you want price aggressively going higher on labor, because then it carries over to everything else, houses, grocery store, gas, everything, right? So wage growth came down to 3.9% on a year-over-year basis. That's a huge improvement on the inflation story. Unemployment rate is trickling higher. We hit 4.1% on Friday of unemployment rate. This is steadily rising over the last, year or so. In fact, let's go back a little bit further. You can see, if we add in COVID in here, you can see that we had a huge spike in unemployment data during this time. And then unemployment came all the way down, hit a low point, or like 3.5, 3.4%, and then has started to very gradually trend higher during this hike hiking cycle, right? So we saw the Fed hike rates, and now we were up to 4.1% in unemployment. So we are seeing jobs data slow. Another one is unemployment claims. So when we look at all the labor data, when we recap and we look at how the dust is settling after Friday's craziness with NFP, we see jobs data is cooling and some inflationary readings are starting to really improve. So are we possibly going to see the soft landing story play? Well, not so fast, because there are some things that are not so exciting. I talk about this very frequently on my channel, but it is a really important topic. The Russell, if you take a look at the Russell, these are small businesses of America, have really struggled in the last several years. They're not seeing the same love as the Magnificent Seven, the really big US stocks like Apple, Nvidia, Microsoft. Those companies have had substantial increases in value. Meanwhile, the Russell is at the same spot as it was, years back to that December 2020. We were at the same level. If you had bought the Russell small cap index, small businesses of America, basically small to mid cap businesses of America, they're flat over that entire period. Now, why aren't they celebrating the rate cut probabilities? Well, they kind of have. They've seen a little bit they've come off the lows, but they haven't seen the same amount because there's still the concern about, okay, well, now the economy is showing some signs of cooling. If we take a look at economic growth under the EDGEFINDER's services PMI chart, services PMI came in really light. And this is a services component of the economy. Manufacturing, same story. We're under 50, showing decline. So the growth story is really important to the Russell as well. So if you're asking me, is the Russell something you're looking at, Nick? The answer for me is I'm always looking at the Russell, because if it has another explosive, run, I would love to be a part of that. But what we need in order to get another explosive run on the Russell is you need to see strong growth and inflation that's not kind of a deterrent, if you will. So inflation coming down, but jobs data and spending staying strong, that's where the Russell would look really good. Right now, it seems like you are seeing some slowing. If you believe the economy might reaccelerate, sure, maybe there's a story here for the Russell. Anyways, I am still long gold. Here's gold on a 4-hour chart perspective. I've trailed my stop loss on this position, so I ended up holding tight, and it really ended up paying off here with gold, because I was pretty much ready to chalk this trade up. I mean, I kept my stop loss. I didn't touch my stop loss, but when it was coming down like this, I was like, you know what? This is a lower high. We might see the end of this trade here. But then we bounced really strong off this 2300 level, and we've continued to show buying support, buying strength here on this gold move. And I've now put my stop loss into profit, so I can't lose money on this trade anymore, which is a great spot to be in. And I do believe personally that gold has more upside. If it comes down and breaks this kind of big move that it made on Friday, if it fails out and breaks the lows, that's going to be my trigger to go ahead and close out of the trade and take profits on the move that has been. So again, I think gold has more upside this year. There's several catalysts in my view that could continue to support gold moving higher. The central banks buying around the world, geopolitics still brewing under the surface, right? Taiwan, China, Ukraine, Russia, and Israel, Hamas. I mean, there are just several potential catalysts there that could cause some fear. And as a slight hedge, I have a long position in gold. At the same time, we have elections going on this year in the EU, UK. I know that the EU, the parliamentary elections were on Sunday. In the UK, there's also an election that has gone on, and this change of leadership always causes questions and concerns. And finally, the US, arguably the story of the year on the global front is the Trump and Biden round two. And that uncertainty makes me like the idea of having a position in gold. And if I'm wrong, and if price, kind of fails out and we don't see, the follow through, then I'll just trail out. I've survived this drawdown on this trade, And with it pushing higher, I've trailed my stop loss into profit. So we'll see where this one goes. If we could take out the highs and keep pushing up, maybe retest the all-time high on a nominal basis, that would be very interesting to see around the 24.50 level, which is the previous all-time high. Now, am I going to take profits at that level? No, because if we get to all-time highs, I would say there's a very strong catalyst that we could break and make new nominal all-time highs. Why am I saying nominal? Because on an inflation-adjusted all-time high, it is much higher than this. On a nominal basis, the highest gold has ever traded is 2450, but adjusted for inflation, it's like 3200 or more than that. It's I think gold has plenty of room over the long term to kind of adjust to the number of dollars that have been printed into the global system. But that is a longer term idea that I have. In the short term, I've got a trade on. I will remain bullish unless we see something really change on the interest rate forecast this year. If we see inflation trend higher again, if it reaccelerates, then yes, I'd probably stay very cautious with gold and maybe more on the sidelines. But right now I am bullish. It is also shown up on the EDGEFINDER as a top setup. Gold is getting a very bullish reading. I'm also long TLT, which is, U.S. bonds, U.S. Long duration 20+ year treasury bonds. So I have a position on that, and I'll show you my TLT idea. TLT. So TLT had a nice bounce. I don't know why what's going on with my trend line here. Had a nice bounce, came down really, really hard. I am slightly in the green on this one, not by much. I think my average entry is like right around 90, 92. So I'm not very much in the green on this trade, but I still like it. I think it has upside. And that would be basically a play on yields coming down this year. So we'll see if that can play out. So real quick, also, by the way, guys, if you'd like to try out the EDGEFINDER for 30 days and you'd like some information about that, this is what I use personally to find the vast majority of the trades that I take. If you'd like to try it out for 30 days, we'll drop a link here in the chat to where you can do so. You can get some information there. I'm just going to check the live stream schedule really quick just to see what our timeline looks like today. We've got, says Ivan coming on, but I think we have James here today. So James or Chandler, if you could just double check me on, I'll say hello to James in just a minute. But I see on the schedule, do we have Ivan coming on today? Is he going to make it? Anyways, yes, as I mentioned, you can try out the EDGEFINDER for 30 days if that's something you're interested in. You can get some information by filling out this application here. It's in the chat. It's also for those watching at a later point, rewatching this video. You can find it in the description of the live stream as well. In terms of other setups, I'm also short on USD CHF, and I need to determine if I'm going to trail a stop on this one. So USD CHF. So I shorted this currency pair. I haven't taken a currency trade in a minute. So this is my first trade on a currency for a little bit. Price came running up to this level here of resistance. I liked the idea. It was showing up on the EDGEFINDER as a possible bearish setup. Still is. And a lot of it is actually COT data. So the commitment of traders data, also just to reiterate, I put out a notification, but I'm sure people always have questions about this. The latest COT data, the latest update is delayed this week due to the 4th of July holiday, which pushes back the CFTC's publication of it by a day. So we'll see. Let me check my messages. Okay, no worries. Ivan apparently is out of power today, guys. So James is to the rescue in just a few minutes here. We've got the 9:45 slot. Anyways, I wanted to come back to my thoughts on the metals too for a moment. In terms of the gold and silver ideas that I've had recently, silver has I barely survived this trade. And what I mean by that is I was so close to getting stopped out. And with hindsight, I can say that, my entry here was a little early, but on the lower time frames, I really liked the way we found support here. This was a weekly trend line level as well as support zone that looked really strong. I liked the fundamental potential catalyst there. It showed up on the edge finder. And when this big move happened, I was like, okay, well, if it gives me a pullback, I need to buy that. And I did, but I was a little early. So my entry was very bad in terms of with hindsight in my favor, right? Price came down again, and I had my stop loss really close to support. Now you may say, this is why this is actually a really good example of why I don't put a lot of emphasis personally on like trying to trade like liquidity grabs or stop loss hunts. I know people love to talk about that topic, and if it works for you, by all means do your thing. But for me, it's like support is just support. Don't complicate it, right? Price did come down here, but it didn't do, this is a key level of support that was pretty obvious on the chart. And my stop loss didn't get hunted or anything like that, right? My stop loss was just clear of the previous low. And you can see here that we didn't see any sort of liquidity grab before shooting higher. Has that happened to me? Plenty of times. I've had a lot of people comment on my videos like, yes, Nick, you were my liquidity, ha ha ha, right? But I just don't spend any time on that personally. Support is support. Keep it simple. The same technical analysis that's been used for a long time can still work just fine. And this, in this case, is a good testament. I stayed in the trade. I survived the bad entry, but with a really good stop loss. My stop loss held, and I never got hit on it. So the other thing is also, if everybody trades the idea of a liquidity grab, then wouldn't they just make it so that, like, if all the game plan was just to hunt your liquidity, and you're like, haha, I'll put my stop loss further down so you can't grab it. Well, wouldn't they just start doing this, and then you'd have to put your stop loss here, and then they would start doing this? Like, if everybody trades the same concept, if it's not a secret, then it's, something to think about. Anyways, for me, it's like, just keep it really simple. Support is support, resistance is resistance, and use fundamentals. Personally, that's how I trade. I'm not saying that's how you have to trade, but use fundamentals to get the general direction. And if you're right about the fundamentals, support should just hold, right? If you're really right about a bullish or bearish directional bias, and you have a good fundamental reasoning behind it, support should just hold. And if it doesn't, maybe you were wrong, right? So that's just my thought process on it. But oil also down 1% here today. Nice little pullback forming. I actually got stopped out on XLE. This was a trade that I took a small loss on. I ended up trailing my stop loss a little bit. So XLE is an energy ETF. It's a ETF of companies, a collection, basically a basket of companies that are in the energy world, right? Oil, gas, like Chevron, Exxon, etc. I went long on it on this little pullback here. Initially went in my favor, but then on Friday, I stopped out. So I'm out of XLE, no longer in that trade. I also stopped out on my Bitcoin idea. So I took a loss on Bitcoin and XLE on Friday. So I had a couple losses, but overall Friday was still pretty good day because gold really rocketed. But we'll see what happens there. But Bitcoin, my thought process on Bitcoin was that I thought we would see some support hold right here. And initially we did, but then on Friday, the big sell-off took me out of my trade. So I'm no longer in Bitcoin, no longer in XLE, but I'm still long gold, silver, and the one of my better trades this year, which is XLK. Actually, XLK is, I think it's taking first place in terms of my biggest trade this year. But I've been in this one since, the April sell-off. So I bought this pullback. This white line is where I got in. I've been in this trade for a minute here, and I've got my stop loss trailed here. And with this potential breakout forming, I may trail my stop loss further. XLK is the technology sector ETF. So those are your NVIDIAs and Microsofts, which have done, everybody knows, remarkably well this year. And that was one of, that's one of the few really strong sectors this year. There's also XLC, which had a rock star day on Friday. Maybe pulling back here a little bit. This is the communication services sector ETF. So these are your Verizons, your Google, your Meta, right? These companies have been rocketing as well. Anyways, guys, we're going to now shift gears. We're going to bring in our guest of the day. We've got James from Elite Traders. We'll be bringing him in just in a moment after this quick commercial break. So stay tuned. We'll be right back with our guest.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Hey, James, how's it going, man? Good to have you back on the show.
Hey, Nick, thank you for having me.
Yeah, and again, also thank you for helping out last week with I was out of town for a little bit, and we had an awesome show, and I saw we had like a massive response, or a lot of people watching the show on NFP Day, which was really cool. And thanks for helping out with that. So, yeah. James, question for you. The dollar's been coming down, and I'm curious what your thoughts are on this in terms of maybe currency pairs that you're watching. I know you trade a lot of FX and gold, so I'm just curious. What are your thoughts on the dollar coming down recently?
Well, I think it's obviously we've got the US elections. I don't think I don't really have much input that you've not already said. So I'm in very much the same mindset that you are at the moment. But I'm mainly watching this trend line, to be honest. And it's a case of if we can see this break, that would be lovely. So I'm currently in a silver position here. I think it's quite similar to yours, actually. I'm watching the commodities quite closely. I'm looking to get long on gold as well. More of an aggressive day trade rather than a swing trade, to be honest. But yeah, I'm quite bearish on the dollar, especially against other things. So, for example, pound dollar, I think we could see higher prices there. So, for example, we've got stability in the pound now, especially compared to the dollar. Now we've got Labour in the government. It wouldn't surprise me if we could see sort of the 1.3 target get hit. And I think that's actually Goldman Sachs' target as well. I think we do have more room to the downside on the dollar, but to where, I've got no idea. Looking to sell dollar, but we'll maybe reassess that one in a couple of weeks' time.
The pound actually looks really interesting in terms of this as you mentioned, this high of the year, I believe, is the 1.285 level or so. We're back up to that level. Dollar's been really weak. Is that? Yeah, that is the high of the year. And they just had elections in the UK. I think that there's the Labour Party has taken over, and maybe there is a little bit of that in tandem with the US dollar being weak from jobs data, PMIs, etc. You've also got just at least the dust is settling, if you will. Regardless of who wins an election, one thing that I always like to think about is, once the dust settles and people are no longer like unsure and uncertain and fearful of what could happen, a lot of times the market can kind of smoothen out after that. So maybe some pound strength alongside some dollar weakness could lead to a break of the high of the year. So maybe seeing a new yearly high or year-to-date high on the pound, and that might actually be really interesting. Where do you think? And I'm just curious, if you were to mark up the pound US dollar and take a trade, how would that look? Like, how would you do you trail stops? Do you put a target on your trades? Like, how do you set up an idea like that?
Sure. So there's two approaches. There's the first one, which is similar to yours, which I'm currently doing with the silver position, in which I'm sort of just trailing stops rather than having a hard target, which I more than likely will do with the pound dollar. As you said, we'll be breaking yearly highs. However, on a day-to-day basis with more of a general trade, I'll just put a hard take profit at the sort of next support and resistance. and just trade like that with normally a 1 to 2, maybe 1 to 2.5 R&R. So in this case, I'd be very simply just looking for a break and retest of this this previous high, this sort of resistance level, looking to enter off a bullish engulfing candle here, and then just looking to trade it up to sort of the 1.3, and then at 1.3 I would potentially take off 50% profit. Now partials aren't something I ever do, really. It's not in my trading plan. However, I am bearish on the pound overall. However, I think there could be money to be made in this particular move. But the only thing that's kind of putting me off really is just the distance between this 200 EMA and price. So normally when we get to sort of 1% or above, obviously 1% price move above the sort of 200, we quite often do see a pullback. So really, in an ideal world, we would see some sort of pullback back into this zone and then a break above, and sort of see this correction. But this is on the H4, so I'm not sure really how realistic this expectation is.
Sure. Yeah, no, I like that that game plan in terms of the pound. Does seem to be moving, at least with a lot of momentum right now, as you mentioned. Maybe a little stretch. Maybe we actually see a little bit of a pullback prior to a potential breakout. I've seen that a lot of times, right? That's very regular for price to come up, hit a level of resistance, and then if it breaks through that afterwards, it's a very strong sign that maybe bulls have taken over that spot. So very interesting one. The other one, James, is that you've had in the ECB world, or the European zone, they had elections on Sunday, and I think that there was some surprises there, but we saw the euro actually gap lower on the open this week and now regain the highs. What are your thoughts on the euro? Are you looking for a sell? Are you looking for buys? Do you have any opinion on this one?
Similar to pound dollar, I think, because as far as I'm aware, the initial gap, the gap down, was more just shock value in the market. I don't think it was necessarily the market's sentiment was bearish. I think it was more just because it was a shock. So I think again, because we've got some stability now in France, it's more clear where their politics are heading, and it's a very similar approach to pound dollar. I'd be looking for slightly higher prices, but I'm not convinced enough to actually get into a position. But it wouldn't surprise me if we came up to sort of the 1.9 area, or 1.95 roughly, up to these previous highs here. But we'll see. As I said, I'm not too invested in this market at the moment. I'm more just watching from the sidelines.
Sure. Yeah. And I don't know if you trade these, James, but do you trade the indices?
Yeah, I do.
You do trade them. Okay. Do you have any thoughts on these ones? I mean, personally, I think you might have heard me talking about this earlier, but I'm long technology specifically. I was long energy. I got stopped out of it, but I'm long tech, which of course, largely reflected in the NASDAQ, which is very tech centric. But these things, man, are just on fire. And the indices, one thing that I find very interesting about them this year is the divergence in indices is ridiculous. The small cap businesses are performing, they're like slightly positive on the year. And then you have the S&P 500, which is positive on the year. But then if you took just like, actually I might be able to pull up, I know an ETF, like the Magnificent Seven this year are just like, this is an ETF that this is 2 times. So ignore the 2x leverage component, but this is the Magnificent Seven. Those are your NVIDIAs, Microsofts, Apples, Meta, Google, and I think Tesla's in there too. But the story here is remarkable. You have such a divergence in company performance in the US. You're seeing a small number of companies just have so much domination. And then the broader market, another one we could do is RSP, is the equal weighted S&P 500. So if you took all the 500 companies in the S&P 500, you just gave equal weighting, you had a portfolio that was, evenly distributed, that is doing not great this year. It's like flat on the year. So there's this divergence, and it's, to me, is actually kind of concerning personally, even though the rally has been so strong on the surface. When you look at the indices, that's true, but the average stock in America this year has not performed very well. So I don't know. I just wanted to bring that up and get your thoughts on generally the indices. Are you looking at them at all?
Yeah, it's a tricky one. I think, I mean, it's pretty obvious now, but the Nvidia move has been a huge driver. So it's a case of Nvidia is too high to buy, but it's also too high to sell in terms of it's, you know, no one wants to be selling that.
Well, and it's like, what else do you want to buy? Like if Nvidia and Google and Apple, if those are the winners and they're just racking in cash and everything else is so, no wonder they're just having all the gains, right? They're the only ones that look great.
Yeah, exactly. Yeah, it's capitalism coming at its best, really. Like you said, the small caps, smaller businesses not doing too hot.
Winners take all, you know what I mean?
Yeah, exactly. It's these giants that are just pummeling through everything. But yeah, I think I'm very conservative when it comes to the indices. I only buy them. I will never sell anything unless it's a black swan event. So like COVID, for example. So I very rarely touch them in conditions like this. So for example, I would have potentially entered on this pullback here, but that's the only time, you know, recently that would have been a valid entry for me, just because it's just rallying up. So I've got a long-term investments account. I've just been I DCA every month, just put money into it, and that's invested in the NASDAQ and the S&P. But other than that, it's not something I would be really touching at the moment unless we do get a significant pullback.
I think that's wise because, you know, I'm the same way. My one trade that I have on in the kind of indices world is, I'll show it to you here. Let me find it. So it's been a remarkable trade for me. But again, it's the frustration of just technology delivering. I've been long XLK, which XLK is the technology ETF, as I was mentioning earlier. I bought it as exactly what you just said. Like the one time I saw really good pullback opportunities was in April, which you just drew up on the NASDAQ. This, you'll see this chart looks very similar to the NASDAQ because tech and NASDAQ are, you know, almost one and the same these days. But yeah, I mean, it's been tricky. The pullbacks have not been there for the market this year. And I think that's been really frustrating, but I kind of agree with you. Like you're not going to catch me like adding a bunch of positions up here as a trader. I trade the indices like you, mostly long. The only time I really will consider shorts is if we're like below the 200-day moving average and trending lower, and there's some serious bearish catalysts. Like 2022, I had a terrible year overall because I stuck too much to the long side, and I started making a little bit of gains back getting on the short side. I actually made money on the short side for a little bit of 2022, which helped to cushion a little bit of my drawdown. But yeah, it is hard to short them, especially when it's a bull market. We are in a bull market, but the last thing I would say on the indices is you have to be careful that you're not, you know, when the music stops, getting caught with a huge position at the top heavy end of a bull market. And nobody knows when that is. But one way to diminish the chances of that happening to you is, as you've just talked about, pullbacks, right? Being conservative with entries, even on the long side, because people can get overhyped and overexcited about the long side and get themselves into trouble, you know?
Well, I'd actually say it's becoming the opposite. I'm not sure about you, but on my Twitter feed, I'm seeing all sorts of things about the S&P, NASDAQ, Nvidia, now just collapsing. It's, you know, it's that sort of FUD or fear coming into the markets. And I am a bit concerned that a lot of less experienced traders are now looking to go short when, yes, prices are high, but there's no reason they can't go higher. And I think there's a case now of people are going to get liquidated trying to do both things. So you'll get people, catching the top, still trying to buy, but also trying to sell it when it's still going up.
I've never thought about it that way, but James, that's so spot on, because when I look at Twitter, it's so extreme right now. Just like this chart kind of looks extreme, like it's like super, like you could say, oh, it's overbought, but other people would say it just doesn't go down. And both of those thought processes are so dangerous. And just like you're saying, like with my Twitter too, I see a bunch of people who they only go long, they're leveraged to the top, and they are, you know, fully convinced that they figured this thing out. But it's easy to feel like a genius when the market's ripping higher. You know, the Mark
Yeah.
Cuban quote is everybody's a genius in a bull market.
Yeah, I was
But
just
if
about to
you,
say that.
yeah, like if you learn that, oh, markets only go up, you will be humbled like I was in 2022. I mean, I knew
Yeah.
that they went down. I've experienced bear markets in 2018, 2020, 2015. I was just getting into markets, but I've experienced a couple bear markets. But the 2022 one was the first one that I've been a part of that was suspended. Like it was a long,
Mm,
you know, if you had bought and held. This is the thing about buying and holding, which, you know, there's nothing wrong with buying and holding if you have a very long time horizon, but this took you 760 days to get back to break even had you been the
yeah.
unfortunate soul to buy the top, you know?
Yeah.
So
Yeah, that's why I think having, even if you're not an investor, having some sort of investment account where even if you throw $50 or $100 a month into the sort of index funds, you eventually will be doing okay, even if you do have to sit through drawdown.
as long as you have that long time horizon and will accept the volatility and won't touch it, yeah, you're
Yeah.
totally right. And you know, for traders who are bullish on the markets, one thing that I like to do personally is not only trade one thing, like, you know, I trade the NASDAQ and the S&P and sectors a lot, but picking sectors and also trading commodities can, you know, give you positive gains even if the market's dropping. Like if your whole plan is just, oh, I buy dips on the S&P, well, when it truly turns into a bear market, you're going to have a rough year or 2 years or 3 years. So,
Mm,
I mean, people can lose a lot of money in bear markets because their strategy breaks down. But if you're diversifying in what you watch, like I trade gold and silver, I know you do as well. And not to mention, you trade a basket of currencies, which gives you many different things to be active and participate in. So you're not just exposed to one thing, which I really think is cool.
yeah.
So James, what else are you watching? Any other like setups or currency pairs that you're looking at today?
Well, I'm still kind of hung up on the Australian dollar.
Hmm.
It's been sort
Yep.
of the biggest watch of mine recently, but it's giving me the same feeling as the yen in terms of we're seeing quite strong moves to the upside. I mean, it's slowing down a little bit now, but it's not really giving any pullbacks to get
Hmm.
some entries, which is a little bit frustrating. So actually, yeah, pound dollar. This was one I'm looking at. As I said, I'm quite bearish on the pound at the moment. Not necessarily because of elections, but more of a general consensus between the population and things. But I won't go into that too much right now because it's more of a long-term thesis rather than an immediate trade idea. But
Yep.
mixing my bearish sentiment on the pound with the Australian dollar's strength, I think it could be quite a nice position to get into at some point. But yeah, I'm just waiting for the right entry. I don't really get the feeling it's ready right now. And dollar Swiss looks really nice as well. So yeah, sorry, 1 second, let me just pull this back. Yeah, so here we've got quite a nice sort of break and retest almost. It's not quite perfect. As you can see, we've got
Yep.
the level of support here broken, and it's not perfect, but it's still a bearish market in my opinion. I'm fairly sure it's on the EDGEFINDER as well from what I remember.
Yeah. Yeah. That's one that's on there. I've been watching it as well. I'm actually
Yeah.
short on dollar Swiss.
Oh, are you? Okay,
Yeah.
well, there we go. We agree on this one as well then. But yeah, I'm not sure where. I've not really mocked this one up too much yet. But yeah, I would quite like to go short on the dollar Swiss as well.
Yeah.
Probably just down to the most recent
Might be
low.
one to watch for sure, James. I do like that one a lot. Also, James, I'm gonna have to jump out of here. I got a call that I'm late for, so I
Sure.
apologize for the
Yeah,
sudden
no problem.
leaving. But before I step out, everybody who's watching, do us a big favor. James gonna take over the show for a few minutes here, just walk through some more pairs and things that he's watching. If you've enjoyed his component, you'd like to hear more from James. He's got his own website. He's got services that they offer. They're highly, highly quality. So check them out. We've dropped a link in the chat. It is EliteTraders.io. Forex James. You can find him on social media as well, Instagram, YouTube, all that good stuff. And James, enjoy it, man. Thanks for coming on to the show. It was nice to chat with you.
Yeah, thank you, Nick.
All right, see you, man.
See you. So yeah, I think the dollar Swiss looks great. So if we are taking the daily time frame bearishness, which seems great, we also have the H4 EMAs just crossed, which is a nice sign, nice sort of bearish confirmation. So looking at this, it's pretty clear that shorts are, I want to say a good idea, but obviously that's relative on your strategy. But for me, shorts are pretty obvious. But yeah, the entries are not super clear right now. So what I don't like is the golden zone. So this fib level, so the 0.618 and the 0.5 level are above the EMAs. And if you don't know, EMAs act quite nicely as dynamic support and resistance. Some people are against indicators, which is fine, but I quite like them. So potentially just a slightly higher move. And I'd be looking for something like this. So roughly a 1 to 2, I think would be quite sensible. Can you check Euro Australian? For sure. I actually took a position on the Euro Australian this morning, but I closed out quite quickly. You can see it here. So I closed this one out for, just roughly 0.5%, because I wasn't super happy with the movement. But the same analysis still applies that I was running off. So it was, this fib level here. I originally had to take profits roughly around here. So this was the trade idea. We also have this nice level of resistance throughout the middle of this golden zone. You can see it's respected around here on sort of June 24, again in July, and then we've been sort of seeing this continuous rejection of this level. And we've now got the 200 EMA that was rejected, and that's what I entered off originally. But yeah, so I think overall, still bearish. I mean, look at this downtrend that we're currently in. So there's no reason, as far as I'm concerned, that this would be ending right now. It's just I wasn't willing to hold it, to be honest. It's only Monday, so. What's my view on gold? Yeah, I mean, gold's pretty cut and dry, to be honest. I think I was actually looking to buy gold, but I think I missed it. Yeah, so I was looking to buy it on this H4 candle. So if we get a little pullback here, and maybe we'll enter. So the reason that I want to go long gold is, obviously we've got the economics and the fundamentals that all align with a long position on gold. We've also got the EDGEFINDER. So technically, we've got if we draw the fib from the low to the high, this golden zone, again, it aligns with a nice level of structure throughout this market. We've broken out of this downtrend that we're in. So you can see we had this trend line drawn up, and we've now finally broken out. This current move that we're seeing seems to be a correction of Friday's NFP, which I, again, was speaking about last week on Friday on this stream. Well, on Trader Nick's stream on Friday. So I really, really like this. We also had the RSI that became oversold. So I like gold to the upside. And I'm very tempted to enter this now, but I'm not going to, just because I want to see this sort of little range get broken before I enter. But yeah, the H4 looks great. So depending on what time frame you trade, I wouldn't be opposed to taking a trade here. The only problem is this wouldn't be a sort of super long-term trade, just because we are still in this range. We're buying a middle of a range. So I'm not looking to then, take this to all-time highs or to take some super long, crazy trade here. It would literally be a case of just trading this technical aspect and getting out and taking some profits out of the market. But yeah, that's my view at the moment. Lee, hi James, hope you enjoyed your birthday. I did, thank you very much. US30 playing ball today. Has your opinion on it changed? Yeah, we can take a look at US30, and then we can take a look at the euro dollar. Actually, Babu, we did already look at euro dollar, so feel free to go and take a look at that if you rewind. So yeah, I'm not in this position, unfortunately, but it's the same principles that I just spoke about. We draw fib from low to high. We've got this golden zone that lines up with market structure. And I was looking to enter here, but I actually didn't take this trade. I think I must have been away, or I'm not sure why I didn't actually, but there you go. That's part of trading. Can't always get every trade. So I mean, it's the same thing, I said this earlier to Nick, that I only buy these markets. If you imagine trying to sell this trend, and overall just selling the indices, it's a very, very difficult thing to do. or a very difficult thing to turn a profit from consistently. So generally speaking, my bias is bullish, unless there are significant reasons to not be. Anyway, the fib still lines up. We also have this 200 moving average that's looking quite nice. It's right here. So ideally, we could come back down from this top, sort of test this area, so this area between the 200 and the 0.5%. And then if we could get this pullback, then I might start looking to go long. But yeah, we'll see. I'm not a huge Dow trader. I very rarely actually place trades on this market. I look at it quite frequently, but it's not my favorite thing to trade. But I'll set an alert, and if the entry shows, I'll take the trade. Any thoughts on New Zealand? Interest rate tonight, RBNZ is kind of hawkish. Yeah, I mean, it wouldn't surprise me. So let me take a look at Australia, New Zealand. Yeah, so I've been bullish on this one for a while, but yeah, it wouldn't surprise me if we do start seeing a stronger New Zealand dollar. We have seen it. It's been quite weak, actually, to be honest. I think there is a technical word for it, which I can't think of right now, but it's technically in a recession. So, you know, it's not something I would rush to buy straight away anyway, but yeah, definitely see some bullishness, but we'll have to see the result. You know, I'm not here to try and predict interest rates and news and things. Just react. AUD CHF. Actually, guys, just before, interesting. This is lined up really well. Interesting. I might take this actually. Potentially, if we can get an H4 bullish candle to just break this and show a confirmation of this momentum, then we could enter something like this. That would be great. But yeah, guys, I opened a Darwin X account last week. I'm not sure if you guys have heard of them. I'm not affiliated, by the way. This isn't an advert or anything. It's just if you guys are low on trading capital, I would really suggest checking these guys out. It's a way to, you know, get sort of investor money pretty easily without having to do, you know, the tedious things like 1 step, 2 step, making 8% and all that sort of stuff. So I'm currently up just under 5% on that, which is quite nice. So yeah, I know a lot of people struggle with capital and things, and a lot of people blow money trying to do prop firms, so that's an alternative. USD ZAR, USD yen. We can take a look at the USD yen. I don't trade ZAR really, but I can give you a technical look in a moment. So again, my analysis actually seems to be pretty accurate over the past couple of days. So yeah, yen, I'm looking for this pullback purely because the price was just too extended. And I was looking for sort of just this reversal to a 200 moving average and some sort of respective structure somewhere. So, you know, at the peak, we were 2% above the moving average, which is quite significant. And normally when we get such a large discrepancy or such a large gap, it's not uncommon we do see a pullback. So I am looking to enter this at some point. But yeah, I'm just very cautious of interventions, but unfortunately, that's a risk we have to take when trading yen at the moment. So yeah, the idea is somewhere. It could be anywhere. I wouldn't mind if it was up here or down here, just some sort of correction and a relax really of this price. You know, this move to the upside has been very aggressive with very little slowing it down. We had some US news that didn't really do anything. So yeah, we'll see on that one. I mean, the market's clearly bullish. There's no reason to be looking for shorts on this right now. So yeah, we'll see. USD ZAR. So I'm not really involved with the ZAR, but we can definitely do a little markup here. So I guess we've got quite a nice level of support through here. there's been rejected quite heavily. Actually, you can see it's not managed, well, price hasn't managed to hold below. So I think I would be looking to go for shorts. I'm bearish on the dollar at the moment, so shorts would make sense. So just because we've seen these sort of failed breakouts, I would need to see more confirmation. So I'd really need to see sort of a pullback, or sorry, a break and retest, and enter on this retest here. So let me just see. That's too high. So I wouldn't be, I wouldn't be short in this market right now. Again, I'm not too keyed in with the economics behind this one, but yeah, just on a technical aspect, I would like to go short and target this previous low. But yeah, just would be very cautious because it seems to really like hanging around this level here, so don't get trapped in that. Euro Swiss. This looks like a really nice long position. Let me just see what the daily's doing. Yeah, this looks technically really nice to go long, actually. And as I was saying earlier, we do have some stability. The European, French elections were initially a bit of a shock. That's why we saw this gap. But overall, I think it's fine. I wouldn't necessarily be bearish on the euro right now. So I think, actually, if I was going to take this doesn't look too bad. So you'd have a stop below this market gap, or the sort of correction of this market gap, just, safety. And this also allows room for these moving averages. So yeah, looks quite solid, actually. Let me have a look. Yeah, so if we see the COT data, we can see the Swiss is actually the most shorted currency right now by smart money. So looks quite healthy. I'm going to bookmark this one, actually, and I'll keep an eye on that one personally. Let's see. Yeah, so Nishant, we've discussed the S&P500 and GP USD actually at the start of the stream about 2:30 roughly. So feel free to rewind that. Well, 2:30 my time is about half an hour ago. Is Nick coming back on? I sure he will be. It's his channel. So yeah, I think that's about it, really. Yeah, so gold's having a little pullback here. So yeah, it's difficult. Gold's a tricky one to try and trade right now, and I'm not super happy with it. Like I said, we're in the middle of a range, so it's a very dangerous place, I guess you would say, to try and start trading this. It's just, if we got the perfect technical setup, which so far it looks okay, but I'm not too happy with the way this H4 has started out. It could be okay, potentially. We could just see a bit of a bounce around this level, and then a continuation to the upside, or we could just see an even deeper correction down to sort of correct these candles here, meet the 200, and then continue to the upside. So I don't really want to be caught in that, to be honest. So I'm being very, very careful because, as I said, it's quite a risky one to try and trade at the moment. I'm not in any trades apart from silver. So I'm not sure if I've still got silver open. Yeah, I do. So yeah, silver's quite simple, really. I wouldn't be looking to take a trade on this right now. I think, to be honest, you've kind of missed this move for now anyway. I think obviously there will be opportunities in the future to get in, but right now price is a little bit too extended. So you can see, you don't want to start buying it right now unless you're scalping or something. So yeah, I think it's sort of similar to gold in terms of it's got nothing necessarily to stop it going higher. But just be very careful because again, same as gold, we're stuck in this sort of the zone at the moment. So you can see right here, Obviously, we did come down a little bit. We did have a little bit of a downtrend that formed, so here, but that's obviously been broken, and it's looking very, very healthy to continue up. But yeah, if I was looking to buy now, I'd need a pullback. And to be honest, I am looking for a pullback. I'd like to scale into this one because my position is risk-free. So when I have a risk-free position, I have no problem entering again and putting that risk back on the table with the obviously the goal to try and maximize the reward. So yeah, it's again just similar case of gold. It's where, if we do get a pullback, where is it going to be to? Could we come back and correct the Friday's news? Wednesday's news, or is it just going to continue to the upside? We'll see. Thanks, James. I'm looking to short the Swiss, then go long. Long as gaps in FX tend to get filled quickly. Yeah, they do. Yeah, gaps in FX are actually very, very useful. I trade gaps quite often. They're good to set limit orders up. Someone's promoting a meme coin. Fair enough. So let's see. Actually, speaking of meme coins, I'm still stuck in Bowden. If any of you guys watch my streams on here, you'll see me talk about this now and again. This is the only input on crypto I've got, and you can see these are all my buy positions, and I have been swept, lost money like nothing before. Crazy, really. But hey, that's that's the fun of crypto. Just put all your money on black and see what happens. Well, meme coins anyway. Did I come here late? I want to know about gold. Yeah, we just spoke about gold. George, feel free to rewind about half an hour. A1 team, I'm not sure if you guys have got someone else coming on. So if you do, feel free to come in and kick me off. I'm not sure what my time limit is on this one. Rewind. It's not long been covered yet. Lee James. What do you think about going long AUD USD? I love that idea. So I am looking at AUD USD right here. So I would like to see a pullback to somewhere. So we've got two levels here which are very, very close together, which I really don't like, to be honest. So you can see we've got this double top that formed here. Price respected this very quickly. No, there wasn't much of a reaction at all. Came down, tested again. This was NFP. I think NFP caused this move down. But yeah, I would like to see this level get touched again. And the stop loss would need to be below this fib level and below this next level of structure. And that would be my safety net. So if both of those levels are broken, then that would be a sign to me that obviously this trade's no longer valid. The problem is I'm just not super confident we'll get a pullback down to sort of this level. I think that's a little bit much to ask for. But yeah, with the Australian dollar strength and the US dollar weakness at the moment, this makes a lot of sense. Obviously, we trade strong against the weak. So yeah, if we look at the dollar, I already had it there. We could potentially see this sort of breakdown. We've been holding this trend since December, well, basically all year. So yeah, I would be looking to potentially take this further down. We could make a lot of money if we do sort of see this breakout. And obviously, it depends on the economics and catalysts and things. It's not obviously that's not based on technicals, but it would be nice to see. James, can I ask your thoughts on buy stop, sell stop on new spikes? Ron, my channel is just Forex James. If you search that, I'll come up. So buy stops, sell stops on news. It can work, but I would never do it. So it's very tricky to do. 1 second, guys. Let me just quickly read something. Okay, cool. So yeah, buy stops and sell stops on news are, in theory, a brilliant idea. You know, it's almost a money glitch. But the problem is, nothing in the market is a money glitch. Because whatever you think of to make money, the broker has already thought of it. So they're not going to let you have even if you have raw spreads, you have every advantage on your side to minimize spreads and all that sort of stuff. Spreads will still increase, and you will get market gaps. You will get, initial spikes one way and then a spike another way. So it's very difficult to pull it off long term. And one of the issues is when you trade like that, let's say we had a buy stop here and a sell stop here. So we had, let me just give you the reason I put them there. So let's say we had a buy stop above this candle right here and a sell stop below this candle right here. And then news comes out. You can see this initial reaction. This was, actually, I'm not sure if this was news, but the point still stands. You get this initial move sometimes where investors are shocked. Maybe NFP came out higher or lower than expected. You will see a move either way or potentially both ways. You could get spiked into both with spreads, both hit stops. One hit stops, maybe your stops don't actually get hit at your desired price. You end up losing more money. And again, it could just be an absolute nightmare where you get a situation like this where you're triggered in and then you're stopped out that one, then you're triggered into the other one and you're stopped out of the other one. So it's very, very difficult to pull off. It can be done. I've seen people do it, and there is a guy that I've watched now and again that does trade like that specifically, and he appears to make money. But I'm not sure if he actually does. There's no proof of him making money. But yeah. So in a nutshell, it's not something I would suggest doing. But if you can find a very, very good broker with very, very, very low spreads when news comes out, and you are willing to take the risk, then sure. Pound Swiss. Yeah, looks good actually. Similar thing, we've just had the EMA's cross. So for me, this is now the time to start looking to take long positions. And again, as we just saw, the Swiss is the most bearish asset on the COT at the moment. So price is showing some rejections of this level, this sort of this resistance. So for me, very simple: break, retest, continuation. This actually looks very good. So I'm going to bookmark that one. So yeah, I'd be looking for a very simple trade here, actually. Stops potentially just below this low here, and we'd have our take profits at the highs. So this is something I was asked actually not too long ago, is why do I not target the high? So if you ever watch me and you watch where I put take profits, I'll never put a take profit at like this wick, for example, or even here. I quite like to put them just below, sort of somewhere here. And the reason is the amount of times I've had a take profit at a specific level, a very, very specific level. So for example, right at the top of this wick, and price will come up and it will just miss, and then we'll head back and I'll get stopped out at, either a trailing stop or break even, or sometimes a loss. And it's very, very frustrating. And the point is, with trading, you will never get the whole move. So for example, the way Nick trades, obviously he has trailing stops. So price must go higher or potentially lower, then pull back and stop him out. So he will never catch the full move. Obviously, I don't want to speak on his behalf, but generally speaking, the way I've seen his strategy work, and it's the same with most people, you will never get the full move of the market. So I'm happy to take it at the most conservative point, but point that makes sense. So for me, I'm happy to take slightly lower and just guarantee that profit. So yeah, Lee James, what I was actually saying is I agree with you. I think this is long. It's just, I don't really like the way price is acting at the resistance right now. I would also like to see a slightly higher 200 EMA just because it's a bit too low, and I like to put stops below the EMA. And in this case, it just kind of sacrifices the risk reward too much for me. So yeah, we'll see, but I agree with the idea. I would definitely go long on this one. So yeah, I think that's about it, guys. Nothing else. Hey, James.
Yeah, thanks for coming on the show today, James. Appreciate you stepping in really quick with Ivan being out today. So, guys, we'll drop the links to James's stuff. In fact, we got them right here in the chat. There's a link to his website as well as the link to his YouTube channel. Go subscribe to James. Obviously, he has awesome trading analysis. James, thanks again for coming on the show. I'm sure we'll see you later on in the week. But right now, we're going to transition over to Chris Pulver. So we're going to do that right after a really quick break. James, thanks for coming on the show.
Yeah, thank you, too. Have a good day, guys. See you later.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
What's happening, everybody? Welcome back. Just finished up a live session on YouTube with the Pulver Report. Had a great session, talked about a lot of stuff. So let's carry that over into this little guest spot with A1 Trading. So thanks for having me back on. Glad I got the link this morning. And still working on a laptop. I guess my supercomputer improvement is going to be here in about a week or two. I'm excited for it, but in the interim, I have 2 monitors that, in a pinch, I can always work remote. So all good. So what I was looking at here is, and you're probably going to watch me take the trade right now. I am wanting to place some hedges. I think we're sitting here at these, really lovely all-time highs. We have weekly overbought conditions. Now, timing this is going to be a bit tricky. I'm not looking at anything that's massively short term. I'm looking out through probably the middle or end of September, likely end of September into October. Why? Well, this week could be interesting, right? We are already at all-time highs once again. We opened up higher from last week's holiday drift. We saw Tuesday was a big day, Wednesday was a big day, Friday was a big day, and we're opening up freshly higher. We have CPI data coming out this week on Thursday and Friday. So it's CPI, PPI. We have Powell testifying Tuesday, Wednesday. We have consumer sentiment. We saw that we had non-farm payroll numbers on Friday. We did see a steady increase in jobs. The revisions continue to be all over the place, not necessarily the good side. Unemployment rate ticked up to 4.1%. So I want to share a couple of interesting stats. I talked about this morning in my previous session. So here we are year to date. NASDAQ's up 24.29%, S&P up 17.38%, Dow underperforming at 4%, IWM or the Russell, a whopping 1%. The mega cap, the large cap, the S&P, the NASDAQ, the market cap weighted outperforming right now. The Russell, small cap, sideways. The Dow, your bellwethers essentially sideways. It's price weighted, not market cap weighted. So that is why the Dow is underperforming. Now, I still see an ascending wedge on the Dow, but performance-wise, this doesn't have the broad market bullish feel that we've seen in years past. This isn't 2017. This isn't 2018. Okay. This isn't 2020 after March's crash. This isn't 2021. This is different. This is highly concentrated, very narrow. I do think there's risk out there. We've seen some big rips on Apple. We've seen some big rips on Tesla. What's interesting is Tesla's up 40% in the last 2 weeks of trading to literally get back to 1% on the year. Is that a good thing or a bad thing? I mean, so far it seems like the market loves Tesla, and I'm actually looking to get positioned on it. But if we are on some, earnings season kicks off this week, really Friday is going to be the big one. Friday earnings, we have financials. If I go into, I think I did post on my Discord channel. Discord posted this last night right here. So earnings, Thursday, okay, before market, we have Delta, okay, we have Pepsi, we have Conagra, PepsiCo, a little bit of consumer defensive, or more like consumer staples, Conagra, consumer staples, you got some food products there, Delta, cyclical, consumer discretionary. The one thing that we are noticing is that your your Nikes, your luxury goods are on the decline, but your airlines, your casinos, your travel, your hotels are on the rise. So people are still spending money. It's just on what? It's usually right now it's showing to be travel, experiences, vacations. So anyway, Thursday will be interesting to see how those stack up between some, food brands versus cyclicals. And then Friday, in typical fashion, the earnings kick off with financials. JP Morgan Chase, okay, one of the largest, and most vocal investment banks out there, where they essentially collar every position they're in. So they're long the SPY, but they're collared every single time. And whether that's monthly or quarterly, it remains like if they can enjoy the upside, great, but they're protected the downside. They have some crazy levels out there. Like they have a massive open interest at like 4,200 at the end of the year, and they probably have one that's open at like 6,000 on the S&P. So who knows? But JP Morgan, Wells Fargo, Citigroup, and some other banks Friday before market. So we'll see how that plays out, and kind of the kickoff for Q2 earnings. Only 29 stocks this week, but it's going to heat up. It's going to get bigger and bigger. We've had some surprising earnings. If anybody's out there trading stocks and trading options, we've had, for the most part this year, I mean, if I look at my earnings plays, let me see if I can find my spreadsheet here. Fudge. I'm looking for my spreadsheet. I was going to show my trade tracker. We've done pretty well this year in earnings. We've probably taken 20, 30, 40 trades in earnings. Won most of them. I mean, I can only think of a couple. There's one week where I was dead wrong on Netflix and it cost me a couple $1,000, but we had a big one on Facebook and a big one on Google, and we've had, Teslas, and we've had, whatever. I mean, all of the ones we play that I think are notable. And we price them out the right way. We try to make a few bucks on them, and earnings have been pretty solid this year. But that's because the markets have been delivering more than expected. They've been hitting expectations. They've been exceeding expectations. And sometimes that makes earnings very simple to trade. So anyway, as we get into summer trading, let's find out. Let's find out if it's any different. I don't think I'm going to trade heavy Q2 earnings. I just don't. I'm not thinking that's the play. I think more importantly for me is that I start to put in some very inexpensive insurance, and I want to talk about that right now. Okay. All right. So I'm going to look at a 20 strike on the VIX, and I'm going to buy. It's going to be an October 16th call. It's 99 days out, so I'm paying for time. It's a 43 delta, which is a little bit rich, but I think this is realistically something that doesn't cost me a lot of money. If I pay $1,000, there's roughly a 4-to-1 payout, give or take. Like right now, the at the money is trading for around, we're at 1263. We'll say the 1250 is essentially at the money. It's paying 505. So what's a payout here? If I have a 5.05 divided by the $1.66 this is going to cost me, I'm getting a 3-to-1 payout on the VIX. Okay. It's not great, but it's something. So I could put in a bit of a hedge right here, get, maybe my $1,000 VIX could pay me $3,000 to $4,000 in profit. That's not too shabby. So if I can turn this $1.60, $1.65 into a $5+ credit, and again, with an increase in volatility, maybe all the shifts and these are much more exciting, where this might pay $6, $7, $8, $9 per contract. Let me see if I can get here for $1.65. $1.65. How many contracts? Let's go. I was doing $1,000 worth, so I'll do 6 contracts here, and let me see if this will fill. So still working and not filling it at $1.66. Let's try this. So it filled. Aha. Okay, so that filled. All right, so similar. I just didn't hear the bells that I typically hear. So 9732. Get these filled really quickly. 9732 filled. 9111 filled. 7634 Okay. 9151. Uh, 9072 and 8051. All right, so it's getting those hedges filled there. Okay, so that's the VIX. And then I'm also going to look at E-mini futures. And this is where it gets a little bit tricky on the timing. So if I went out to September 30th, this is 84 days out. This is an end of the month. This is, arguably that September effect. Doesn't mean that I'm going to be spot on and right, but let's take a look. September 30th. Right now we're trading at 56.27. And if I buy, I had a 4,800 put that's going to cost me about $1,000. Okay. Now that's the most I can risk on this trade is 2 contracts. So if I just did 1 contract, it's going to cost me about $500. So I'm going to do 2 contracts, cover. It's going to be 0.5% protection for potentially a 21 payout. Now I understand that going out to September, this is likely not going to be a credit or a long put that will be in the money. I mean, we're talking like 15+% to the downside. Okay. But on the technical side, if the SPY, let's go to ES real quick. Weekly chart overbought with divergence. Okay. The floor that I have protected, we talked about this last week. I did kind of a unique trade where I did a bear put spread and a naked put that I ended up getting about $1 on some of my margin accounts. And I only had to pay about $300 on the IRA accounts, but I'm protected up to about $4,000 in profit. So that's one trade, but I want to go out much lower. And all this really is if we have a big spike in volatility, then this will likely be a proper hedge. I don't know how much it's going to pay. I don't know if we're going to, I mean, I'm kind of pricing it like it's some big black swan. It likely will not be, but I guess the concern would be something around 5,000. If we let's just say hypothetically that we fall to 5,300. I mean, that's a big drop. That's the S&P dropping 300 points. That's not nothing, So it's not 10%. I mean, a big sell off. We went down to 4,800 on the ES. We would be talking about this thing around 13 to 14% sell off. That insurance does not cost a lot if we have a nasty sell off. Okay, so it's not something I'm going to spend a bunch of money on. But if I am right and we see, let's say, a 3% dip, a 5% dip, a 6 to 7% dip like we had back in April, this will probably pay, maybe 3 to 1 or 4 to 1, right? I mean, it's potentially positioning for a 20 to 1, if not greater. But I'm going to put this on here again. I'm willing to pay $1,000 on the VIX. I'm going to pay another $1,000 that way. I'm spread out with a little bit of risk. So I've got volatility hedge and I have an actual futures hedge. Right. So I'm going to pay $1,000 for this and I'm looking at a 1050 debit. Let's see if I can get out of here for like 10.45. Maybe go slightly under the ask price. I'm going out to end of September, 4,800. And I'm mostly basing it on a delta situation. If I went to like 4,850, a little bit more expensive there. 4 delta, 5 delta. I think that's okay. I mean, I'm gonna do it as is. Keep it cheap. Keep it $1,000. Go out for 2 contracts, and let me throw this one out there too. So let's go here, and it filled. Perfect. Okay, so there's my debit right there. Similar, 9732, doing the same thing here. 9732. Okay, and 9111. 7634. Okay, just give me a few minutes to get these accounts filled. Okay, and then 9151, I believe. So this one's filled. Yep. Yep. Okay, and then 9151. Filled. And 072. And 8051. Okay. So I should have every account filled right now for a hedge. Yes on the ES. Yes on the ES. Filled. 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 And filled. Okay. So insurance on the VIX, insurance on the ES, and now I can kind of position for what's next. Okay. For this week, I don't think we're necessarily coming back down to 542. The probability of that is already pretty slim. We broke out of last week's high. There's only about a 12% chance that we come through this floor. So a couple of things here. If I were to do an inexpensive, let me check this on ES. Actually, we can go SPX. I'm going to try SPX because if we break through last week's low, that would be all the way down here to 54.47. If I did a 54.50, SPX, if I go out to, let's say, I'm just going to keep this pretty simple and mechanical. Let's go out 30 days. Well, if I'm going to go out in time, I should probably, no, that's not a good trade. I was thinking about if I did an in the money bear call spread, but the problem with that is it would cost me next to nothing. I'll just show you what it looks like. If I went out 30 days from now and I said we're going to be below, let's say we break this floor at around 54.45 or roughly 54.50. If I do a 54.50, sell that call and buy that call, okay, it's a $10 spread. I can collect $8.30. Now that means that my reward is $830 for my risk being $170. It's a cash settled instrument, so there's no assignment risk here. Okay, but even if I'm right, okay, even if I'm right, because there's time in this trade, in order for this trade to truly pay me the full amount, I need price to not only go towards this level, but do it slowly and slowly and slowly and trickle down there towards the end of my expiration. If I do this today and in a week, this thing's already down to my price level, I'm not really going to have the credit to protect on the trade. Okay. So, it's not bad. It's not bad, but I almost feel like we're better off. This is a tough one, man. Maybe I'm going to switch over to the SPY and try something different. So if I went out 30 days on the SPY, I could go out 32 days on the SPY. Let me see what this is going to cost me. We're at 555.18. If I buy the 556, I buy the 555. Yikes. This is going to be a $14 debit. I think to the upside, I want to give myself about 20 bucks. So 535 to 555 to 535 to sell there, and a 556 to a 576, 575. So it cost me $11 for an expected move of 14. That's not bad, but my reward to risk is a little bit backwards. and we might not see a ton of direction. So don't love that move. If I switch it up for something today, let's go here, and then I'll do some analysis. I did a long session this morning, and I want to make sure I get some trades in today. So I can go out 25 days. If I buy, right now we're at 555. If I buy the 550, really? That cost me $11. Ugh. And you're paying a little bit more than I want. 551. What's the difference here? So I'm paying a little bit more for the extrinsic. So we've got 555.15 minus 551 should only cost me $4.15, and I'm paying $1.30 more. So I'm giving the market back about $1.30. If the market drifts higher, that means my break even is going to be around 556, 556.50. So we don't. I don't. If I took this trade like now, I'd have to bank on the price moving up towards like 560 being a bit of the destination. So I'm a little torn on that right now. So all right, I'll put this in. I've got hedges on ES. I've got hedges on VIX. For right now, if I looked at the probabilities based on this week at 55.50, this would be a bear call spread. If I want to do a couple things, we could do SPX bull put spread, and it'd be a backwards reward to risk. But if I said that by Friday the 12th, okay, we're still going to hold above 54.50. You're going to see that's going to pay us next to nothing. So if I sell that put and buy that put, I get 20 cents of credit for a $480 risk. No, thank you. Even though that's a high probability trade, that's a terrible payoff. So that's not going to be the trade that I take. Let's see. I'm curious, like right now, if I did something, because it's cash settled, if I go out and say, are we going to be higher or lower by the end of the year? That's the question we need to ask, right? So I'm going to update this really quickly. Let me take some requests. Let me get some analysis out there. And I'm sorry that I'm, it's kind of dominant. Yeah. So I saw like, can you do this Forex pair? Do this? Yeah, I'll do that. Just give me a couple minutes here. So I have, this is essentially going to be my hedge. So I have a September 4,800 long put. $1,000 risk for 20 to 1 payout. Okay, and then on the VIX, in addition to my 1050 call that I have, I went out and I bought the October. October $20 long put. So it's out of the money. $1,000 debit pays 4 to 1. And that's at face value. If the VIX spikes and we go from 1250 to 20, I could see that pay out way more than 4 to 1. It just depends on how the option prices play out and how sensitive they are. But I obviously wouldn't mind having some type of volatility event. We've measured 5 waves on the SPX, and I think that we're due for a bit of a correction. I'm not calling the top, but I just think that when I get dailies and weeklies and everything overstretched, it's just what is it about the news that's going to allow this to kind of put a dent in this market. So, like I said, I think this week we haven't seen a 2% sell off in the S&P since it's been like 377 days. More than likely, this is going to be 378 days, and that tally keeps running. It can keep growing and growing and growing. It doesn't have to be any type of like, oh, it's at historical levels. It's not. It's not even close. But the reality is, we did have a 6 to 8% correction in the April pullback, and so it just takes a little bit of an unraveling. And so I'm just curious with the data this week. CPI, what's the number going to be on Thursday? The year-over-year, is it come in 3.1 as expected? Is it lower or higher? Powell's going to be talking on Tuesday and Wednesday. Data comes in. Friday, we have U of M sentiment, and we have PPI data this week as well. We have a NZD rate decision. So we're kicking off earnings. I mean, it's going to be an interesting week, but I don't feel comfortable saying that this week price has to go here and there. It's probably not the case. If we go out like, maybe next week, maybe there's better expirations there to time a little bit more of a directional play. But part of me is thinking now, market's going to hang on to a lot of stuff through the summer, right? We've had a great first half of the year, maybe top 15 all time, one of the best ever in election years. That's pretty impressive. So there's a lot of milestones the market's breaking this year. I think the weird thing is that the market is moving this way with a narrow concentration. That's the weird thing. And we know that and we can feel that, but it is what it is. Doesn't mean I want to call the top. This market can keep melting up, ignoring a lot of things. It's called fiscal policy. It's called fiscal stimulus, right? That's what's been happening since COVID. Fed raised rates. Fed's been tightening. Fed's somehow trying to navigate this soft landing, no landing. Doesn't mean it's going to be spot on. Doesn't mean it's going to be right. I think I shared this when we first started the session today. Okay. This is what sticky inflation looks like. You look at your EDGEFINDER tool, you can see that we have not really seen dramatically lower CPI prints since summer of last year. So I think for the market to have a 72.5% probability that September is going to be a rate cut, the market's going to want to see continued signs of inflation improving. The one thing that would be throwing it all off would be if inflation data this week, month over month, year over year, shows it's 3.2, 3.3, 3.4. If somehow we have a miss and it's higher numbers, this is going to change. This is the other thing I want you to pay attention to. I've mentioned the last couple of months that a big recession indicator is a 12-month rolling unemployment rate. If we have an uptick of 1%, that has been led by a recession every single time over the last 70 years. We're at a 0.5%. Okay. Probability of that is there's a slowdown that's ahead. I think that there's a harsh reality that AI's capability forcing, a smaller labor force to be more productive, more automation, do more with less. I think the resources and margins are potentially, impressively optimistic. But to do that, you're going to see a lot of pain in the labor market where people are just not working. That's a scary thought. But we have a pretty decent divergence between what non-farm numbers are giving us with jobs that are tapering off or slowing in trend, as opposed to what our unemployment rate is doing, which is going up. In the last 12 months, this rolling unemployment data has ticked up 0.5%, which has historically been aiming towards a slowdown. We also saw a big miss in PMI numbers last week with services PMI being below 50 bucks or 50 points. That's also a sign of a slowdown. Okay, so fundamentally, we definitely have some things out there that, is the cut appropriate? Sure, maybe. If the Fed wants to try to, soften the landing, I think it's appropriate that we have a cut. The problem is that we have inflation that's sticky and stable. A cut may not do the trick, and this is why I keep going back to this. I don't believe that the Fed, give them another year, give them another couple of years. I don't think that the Fed is going to do this without any type of damage. Something's going to happen in the equities market. Something's going to happen in the bond market. Something's going to happen in the dollar. Something weird is going to happen where it's going to be some type of break. Just my opinion. I could be dead wrong. But usually we are seeing that something has to give and something has to, break for there to be some type of big crash, big reaction, big top, big bottom. And I don't know, but stuff that I'm paying attention to. All right. Okay, let's switch gears to some requests. So my little weather report, if we did major indexes, ETFs, then we'll do dollar, oil, gold, silver. Crypto had an interesting last couple of weeks. I've been talking about this bear trap scenario, which I think it's really happening. We're going to monitor those levels pretty closely. So let's start that out. Yeah. Okay. So I think that we're sitting here at these overbought conditions on the weekly time frame and daily. Again, I don't want there to be a top. Okay. I don't want there to be an ugly correction, but I'm willing to pay that, 0.5 to 1% of my portfolio for a 10 to 1, 20 to 1 payout just in case, because what I can't afford to do is be totally exposed to the downside. If this market has a crazy crash, I don't want to be exposed to that crazy crash, right? I want to be able to profit from that crash in some capacity and offset and possibly, manage some drawdowns. Okay. Lee's asking a good question. Lee, yeah, I shared that Discord with you yesterday. I think you left a comment on my YouTube channel. On my Discord, yeah. So come into my YouTube channel, and it's right here under education. So all the robots that I track, all my trading rooms right here. So I have trading rooms. I've got my individual robots and full classes. These are all turnkey. My courses, I've got some other subscription stuff on here for market traders, and then some, video series for just complete, all my patterns, the way that I trade, the way I add to my positions, the way I scale in the dollar cost averaging, the investing in the Forex market. That's this survival trader thing I did a few years ago. Okay. So it's all here under my education tab. I also added to my Discord this weekend. I mostly keep my chat, pretty streamlined. I don't have a ton of stuff on my Discord. I try not to make it super overwhelming. And so, a free group chat is for everybody to come in. It's just, traders talk, all community driven. But I went ahead and added, Forex specific, stock specific, option specific, future specific. Why is that? Because I know I have traders that are in all those different asset classes. So if you want something specific to, here's my favorite trade in Forex, keep it in that chat. Here's my favorite trade in a stock. This is a stock that I like. Now, again, this isn't spamming. This isn't trash. This isn't trolling. Okay. Obviously, I'm going to moderate that, but this is just open discussion. If traders are looking for information, this community is for a bunch of great traders, new to old, seasoned, inexperienced, tons of experience. So there's plenty of knowledge out there to, if it's not just me answering, we've got a bunch of great traders that can help answer and kind of steer the conversation. So I thought I'd add those extra pieces this weekend. But there you go, Lee. If you want to check it out, just go to the education tab. And if you have any questions, just throw me a message in the free group chat and from there. Okay. All right. So taking a look at the SPX, couple of potential scenarios. All right. I think it's pretty clear that after this last week, so the holiday trading we had on Tuesday, Wednesday, and Friday, the market rips up, makes these all-time highs once again. Everyone's excited. But right now, the level I need to watch on the SPX is 54.43. That chart alarm is at 5443.75. You can call it 5443.50, but it's right below these recent lows. Here's what I think. If the bears are going to go after some type of damaging move, that's where they're going to do the most damage. They break that low and we break this trend line. That's where the bears get the upper hand and start to revisit this potential 52.67 level. That's where the VIX spikes up. That's where we start to see a bit of a correction. That's where we start to see, the news and the headlines are starting to lean, oh my gosh, what's going on? Something's breaking. What's the Fed going to do? Right? Right now, we have said this for the last several weeks, especially. You can't fight the market or call the top if you don't see price supporting this trade, right? Get out of here, data. So if my floor remains intact, get out of here. If my floor remains intact, then this continues to be either one sideways or two melting up more. If the floor breaks 54.43, 54.42 and change, if that floor breaks and we start to break the floor and the trend line, bigger, scarier things are happening. Now, from a wave count, I've already talked about this. I think that it's possible we have some type of 1, 2, 3 wave correction. What makes that a little bit concerning would be if we have a big enough correction to come all the way back down towards 5,000s. Do the bulls take this back up, right, and revisit the high? Maybe they do, okay? But my concern would be that if we put in some type of corrective move and we get this to be a potential topping pattern, that we go from channel high to the midpoint to channel low, and we actually put in a topping pattern. And if that topping pattern is a head and shoulders, believe me, we're measuring that move, and I'm going to be crazy bearish on a neckline break. Okay, it doesn't mean we're looking for a top. I'm not, right? But if this market is going to go sideways, it makes some sense that if things kind of taper off a little bit, things kind of stall. We've had a heck of a run. If you go back to 2017, look, I said this early this morning. The last time we saw a real sideways move in the market was 2015 and 2016. That's a long time. That's a long time to think that this market has gone nowhere. From 2016 to 2017's breakout to the upside on the SPY or the S&P, we have seen nothing but trends up or down. And it's mostly been up because we're talking about this at all-time highs. But let's just revisit that little timeline. We broke out in 2017, started to drift higher. 2017, every single month in the S&P was bullish, every month. 2018, most of the year was bullish until the end of the year when the market finally priced in a rate hike cycle and the market 20% by the end of the year, backstopped by the Fed early 2019 all the way up, pushed to all-time highs again. We get into 2020, stretch to all-time highs, COVID crash, market dumps 30 to 40%. Fed steps in, buys its way out of it. We debt fuel this rally. We're still dealing with this fiscal stimulus and monetary policy in the markets, in the economies, in the global economy. And 2020, 2021, one of the easiest bull markets I've ever traded in my life. 2022 was the reality check and the reset. Tech was down a ton. If it wasn't for tech in the Mag 7, we wouldn't be talking about this at all-time highs. Okay. Right now, your Mag 7, your large cap tech is probably responsible for about 35 to 40% of all of the gains in the S&P. So we're here at all-time highs, but it doesn't feel right, And again, that doesn't mean anything other than it's not a healthy broad market bull market, right? It's not a broad bull market. It is a narrow and concentrated, and therefore the risk to the upside is pretty great. I feel like what you're grasping for is like a sliver of profits for more, and we can get it. But if we have some type of weird event that all of a sudden throws this market for a cycle rotation, or throws this market for a cyclical rotation, or throws this market for a profit-taking event, or throws this market into some type of actual risk-off event, that's where ugly and quick and nasty price action can occur. So doesn't cost much to protect from that, right? I literally allocated 1% of my portfolio for that to possibly cover about 5 to 10% of any type of drawdown. Now, that's not meaning that I'm going to be profitable, because for me, I also could waste 1% in hedging and have it pay $0. And I just have to look at it again. And so in a way, if I want to be properly protected to the downside, I also might be losing that 0.5% or that 0.5 or that 1% as well. And so I need to continue generating income at the same time, right? So Dev says, should I invest in the SPY at all-time highs? I mean, the simple theory is dollar cost average, right? If all you did was, who cared about the price? Who cared about the timing? If all I did was every single month or every single quarter, I just bought $100 of the SPY. You can do that now, right? I bought $1,000 of the SPY. You can do that. You don't have to buy whole shares. Now, if you have over 100 shares of SPY as ownership, you can control options. You can lower your cost basis, and that's the route that I go. I like to have that ownership. But if you want to do nothing but dollar cost average, look, the Qs in the SPY are built in a way, and you've seen it this year. It doesn't take a lot of stocks to push those things higher, right? We're literally talking about 3 to 4 stocks this year that have carried most of the gains to these all-time highs. The S&P is up 17%. The NASDAQ's up almost 25%. It is a narrow market of what's carrying those gains. So investing, look, if the S&P goes to 600, you're going to be kicking yourself, right? If the SPY goes to 600, that's 40. That's another what? 45 points higher. That's huge, right? That's 450 pip or 450 points on the S&P. That's big. That's another 8 to 10% higher. So you'd be kicking yourself. But at the same time, If you're buying it now for the first time at all-time highs, I would also be prepared to buy it at a 10% correction, wherever that is. Because if we get to 6,000, we have a 10% correction, we're back down towards 5,400. You know, so I don't look at it anymore as numbers as much as I do percentages. Because a 1% move now is a lot different than a 1% move back in 2008. Percentages are the same, right? The dollar amount, the point amount is different than a percentage. A 1% move is still a 1% move. A 10% correction is still a 10% correction. But point-wise, I mean, this is what makes the market so scary in 2020, 2021, 2022. Everyone's like, oh my gosh, 1,000 points in the Dow. Well, the Dow is a $40,000 instrument. 1,000 points is nothing. It's still, it's a percentage. So what are the percentages? So dollar cost averaging would be, yeah, if I bought it right now at the highs, I'd have to be prepared to be willing to buy it again at a 10% dip, maybe a 20% dip. Maybe I buy it now at all-time highs and then I buy it again next month at all-time highs because that's what the market's going to continue to do. So you become kind of price agnostic and you buy because it's the instrument that makes it easy. You know, the S&P is an easy investment. It's supposed to represent the broader market, but it doesn't necessarily mean that it's carrying a broad market. It is showing us proof this year that if you buy the SPY, you could have one stock that's big enough, NVIDIA, right? You could have one stock that's big enough to carry the torch. You could have a handful of stocks with such concentration, such power that the cream not only rises to the top, but it also drags everything with it on this particular instrument. But the Dow is price weighted, but individual stocks aren't performing the same way. Exactly. It's kind of why it's made, right? The S&P, the SPY is made that way where it is market cap weighted and it makes it kind of easy. Okay. All right. So let me do a quick rundown for some trades. All right. So I did a lot of this is recapping what I did earlier this morning. Oil, I still like bullish on oil, pretty well supported at $80 to $77. Gold, I still like bullish on gold. We're pulling back a little bit. We're fading off that recent move. I was looking at gold to do something like this, sideways to sideways, and I was looking to see, does it actually break this? Does this mean something? You know, is this a break and a flag? If we get a break and a flag, and this is a bull flag on gold, you know, I'd like to see gold revisit 2440. If that's the case, great. Okay. I think on GLD, I know I have some ownership here. Let me check something. I want to see when my covered call expires on GLD. So GLD right here. I've got my shares. I've got an August 2nd, 230, 250, and 235. So I will watch. I will roll if I have to. I'm not going to let this get called away. I'm trying to run with the exposure at GLD longer, but I'll be watching those levels. Silver, to me, is still the better trade on the metals. I like silver a lot. We broke the trend line. We also bounced off the trend line support. We had a bit of a bear trap on the right-hand side of this and ripped to the upside. I would like to see silver again, nice little run. If we have a little pause or pullback, I'm looking for a bull flag. I'd like to see if we have a trend resumption in silver. If we don't, I'm still positioned for long overall. I have credit spreads in silver futures. I have some ratio spreads. I'm looking to get long on SLV with some naked puts. I mean, a lot of things. I like silver better. I want to be long on both. I want to be long on gold and on silver. Okay. Oil we just did. Gold, silver we just did. Copper, I did see that copper has a pretty good looking move. I think I might put on a copper futures trade right now. Let me see here. Copper, I just missed it. I mean, the bad part is this was a freaking trade from the end of June. And that was roughly, I mean, pullback wise, that's not the right instrument there. This pullback from low to high. Copper came right back to kind of that perfect 50% zone. So I don't know. I think I just missed the spot. So I'm just going to hold on. I mean, I want to be long on copper, but that's also with like the global economy doing well and copper's up. And, you know, they call it Dr. Copper because that is a PhD in economics, because every time it's up, it means a good thing. Well, this isn't up, right? That's a sharp decline from May to June. So, I mean, is copper capable of testing all-time highs? Yeah, maybe. Maybe this is a rip to the all-time highs, but here we go. What happens there? Do we have a double top in copper? If that's the case, I'd rather short it. So I'm going to look to see if I can trade something around this late June low or back up to the highs around $5 and change, and then maybe get short on a futures contract. Let's go Bitcoin and Ethereum. Then we'll do some currencies and I'll let you go. I'm going to try to jump into my trading room around 11:20, 11:25. So anyone that's tuning in, that's in my equities on demand class, we'll jump in around 11:20 or 11:25. Okay. So this is the bear trap scenario that I talked about on Bitcoin. Okay. So as we started to decline, I said that don't be surprised if Bitcoin comes in to find this pocket area and test this low. And we not only tested the low, but we came in and tried to make a bit of a punch through it. Now that punch has failed thus far. And it doesn't mean that this is the greatest time to buy. To me, what this means is I did have some add-ons here. I added to my Bitcoin exposure. I have BITO, IBIT. I actually could look. Let me see if I can do this right here. Let me look at a Bitcoin futures trade. I'm just curious what this would do. If I do a MBTC Bitcoin futures, I could go out 18 days. Is there a way that I can stay above 53,400? 53,400. 53,400. If I did above 53,000, really? I do a friggin' credit spread and it's going to cost me 12 grand? Oy. No thanks. No way. There's got to be micro Bitcoin in here, right? Let me check. So micro Bitcoin. There we go. That's a little bit better. All right, let's try this one. So if I go 18 days, 53 and 52, now the buying power is reduced. That's a little bit better. I don't like the reward to risk at all. I'm risking about $75 a contract to make $25 a contract. But you know, the rule of thumb on a slightly out of the money bull put spread is to collect about 30% of the width. So if I have a, you know, that's about right. But I mean, I don't have the flexibility to move this thing up, right? Now I have, you know, 68 risk for 32 reward. Probability wise, this is a 66% chance of profit. I should be able to collect more premium on that. Let me go out 18 days. If we stabilize here, that's 53.5. Let me see what 50,000 looks like. Maybe I can go out a little bit farther. So I go to August and stay above 50,000. It's about the same reward to risk. So if I did 4 contracts, max loss $300. It's about a half of 1% risk. 50,000 by 49,000. Can we defend that level? I mean, 50,000. Yeah, this is tough. I don't mind taking that trade. I think we kind of have to hold. I mean, essentially I'm saying if I'm a bit more of a bull on Bitcoin longer term, you know, I know 53 days isn't long term. And certainly we've seen, you know, uglier, nastier pullbacks and drawdowns after this type of run. I mean, are we about to embark on a, you know, this rally here is going to experience like a 70 to 80% correction on Bitcoin, and then we resurface here with another bull market? Or is this, we've had a nice run, right? We've had a nice run. We're sideways. We have a bear trap. This is why I said for right now at 56.3, if the bulls can reclaim 60K with a bull flag, that's a good sign for this to stay sideways or stay supported. So I think the trade I'll probably end up taking is if we get back above 60K, I'll probably look at a futures trade where I can grab something if we stay above those highs or stay above that 60K. Because I guess if I'm calling a bottom now, it's like if this is a falling knife scenario, it's like I don't want to see, I don't want to risk much there. You know, I don't want to call a bottom. So I'll look to see if price breaks back above 60K before I take that trade. All right, sure. Okay, so crypto, real quick. I think it's a bear trap scenario, which is we tested the low. If the bulls can close above 60K, I think it shows that the bulls are still alive and well. I know there's been a lot of drama going on with Mt. Gox and supply coming back into the Bitcoin market. It's a little bit more accessible now, which is interesting on the retail and institutional side with some of your ETFs. Ethereum, if we're going to approve ETFs, we're still waiting on those. But I see both of those setting up for some support that is now. If the support doesn't hold, then we've got an ugly situation on our hands. But if that support holds, there's your resistance. So I just want to see if price, similar to this, we just kind of coiled. So let's say it stalls here, coils, and then goes to the upside. Okay, well, then I'm looking to put in some type of, credit spread. So maybe a Ethereum credit spread, maybe a Bitcoin credit spread, and trade some futures contracts on both of those, if possible. So I'll watch those. All right, let's do a quick rundown of currencies. Let's go Aussie CAD. So Aussie CAD heading to some fresh highs. My Aussie CAD position should be nice. Let me check here. I'm going to jump in on my phone. And that position should be up like $500, which is decent. And that's going to be like 50K for the copied accounts. Aussie CAD is up around $462 on my master account. So it's up 253 pips net. So individual trades, I did the math on this. I'm up like 1,000 pips on the Aussie CAD right now. And I'm looking to stay long and still stay in this position towards, 94. Aussie Swiss, I still like Aussie Swiss long. I'm looking at some add-on trades above 6,100, 6,125, 6,150, staying long. Yen crosses. I said this morning. If you're trading the yen, continue to scalp on a 1 hour, 30-minute, 15-minute, 5-minute alignment. If everything's lined up bullish, stay bullish. Don't fight it. This carry trade is going to be alive and well. The carry trade continues to happen. The Nikkei's back up towards all-time highs again. Who knows if there's going to be another level of intervention. I'd say that the yen cross right now is just trade what you see. Don't force. Don't call a top. Don't trade the yen if you want to call a top. If you think the yen's going to get stronger, don't do it yet. I don't think it's ready. So if you like it, I'm sure traders that have been sticking with my plan this year, which is be long against the yen, but scalp it. It's been paying out great. Your reward is much bigger to the upside if it continues to the yen continues to depreciate. We still have a profit running on the Aussie New Zealand. We're long in this one from 108.40. Break even is in. We're up about 150 pips, 160 pips right now. I'm looking to see if we can breach the 110 level. Did we close this one out? Let me check. Nope, up 151 pips. So I think I moved a stop loss. Let me check this. Trades, Aussie New Zealand. My stop loss is still sitting at 108. Okay, so I moved it up to plus 40. My stop loss is in at 81. So 108.81 is my stop loss, which is a little bit tighter. But if we break and go up, I get either one stopped at 40 pips or two, this thing blows through these tops and I can continue to cancel, replace for more profit. Okay. Aussie dollar, we had a bit of a breakout. I'm looking to see if the dollar index will cooperate for some weakness. Aussie's been pretty solid. Look for a pullback here around 67. We get a pullback to 67. Watch for some shorter time frame support to bounce and see if that Aussie dollar continues to go with a breakout. CAD Swiss, I'm still long on CAD Swiss. I'm trying to add to this position to stay bullish. CAD Yen, stay with the alignments. Swiss Yen, stay with the alignments. This one probably has the best looking sell trade opportunity that I can see technically, but we have to break all these support levels and we've got to break that trend line. If that happens, Swiss Yen could be an awesome trade for 1,000 plus pips, right? The problem is we could go here and here and here and here and here and here, and who knows? Maybe it's that and then that. I don't know. It looks good technically, but do I trust it? Not at all. Not right now. Euro Aussie, this one should be heading lower. So we still haven't broken the trend line to be a buyer. We broke below, we were short on this thing at 62. I said going after this like 6,000 level, which we've tapped. That level 6,000 on the nose, we're going after maybe the 5,900s. If you're a buyer, I would be looking to buy this thing off of like 59, or you wait for a trend line break over here. Something like that. That's the trend line break if I'm a buyer. Otherwise, you're getting like pushes and chop, and it's still just favoring a bit downside move. EuroCAD, I'm looking for a potential bear trade. If this is a head and shoulders, left shoulder, head to neckline, right shoulder, I might just look for the break of the neckline and not worry about trying to call this right shoulder. That's not really a thing. It's not a strategy to call the right shoulder because the trade is below the neckline. But I'm looking for a short position. Euro Swiss, I'm long. Okay, this one's looking better. Euro Pound, we are short, and we got filled. We got a great fill at 84.80, and we're up about 30 to 40 pips, which doesn't seem like a lot, but in this currency pair, that's like a home run. So I'm not going to move to break even yet, but we're looking better. Where if this continues to fade lower, then we're in good shape. Euro Yen, this is a pretty simple one on the trend line. If we break this trend line, there's a great sell opportunity. Until then, just stay the course and stay with the alignments. Euro New Zealand, we did break this trend line. I was looking for a double bottom. If we can come back to like 7,400 or so, I'd like to buy this if possible. Euro dollar, I don't know, man. The dollar index is still tough to read. It's kind of chop suey. I might have that. This is a June CPI high that's my stop loss on the euro dollar. I was short. We were up around 30 or 40 pips. I didn't protect it. I didn't go to break even. So I might take a small loss on this one. And I'll just continue to watch and reestablish on the dollar. I mean, I was looking at this as a potential broadening pattern where the dollar, gets stronger, comes down to here, and then I look for euro dollar strength. I just don't know. It's like, is that the euro dollar? Probably. Is there a trade in there? Not really. So I don't love this right now. If I get stopped out, I get stopped out, and I'll reassess everything. Pound Aussie is sitting at equal lows. I don't really love this currency pair, but I am looking for an opportunity to if I was going to look at a swing trade, if I bought it here, stop loss below, and look to see if there's a range trade. So, there's good reward to risk on that. If it goes higher, you cancel, replace it, get more upside. But are we going to see the pound that much stronger than the Aussie? I don't know. So I'm not in the trade, but I don't have a trade I love. Pound CAD, similar. I'm going to wait and see if we have either an equal top at 76 or a resistance level at 1.78 before I get short. Otherwise, we got to break back below the 7,300 level for me to sell. Pound Swiss, I'm long. Pound Yen, stay the course. We're getting over extended, but again, don't call the friggin' top. I can't say that enough. And at some point, you're gonna have to listen, because if anyone's asking me, what are you doing on the yen? I'll say nothing. The only thing I'm doing on the yen is I'm buying the FXY, which is a way to trade the yen ETF without it costing me an arm and a leg every single day on Forex. So that's my exposure right now. Pound New Zealand's moved off the lows nicely. This one's probably range bound back up towards 2.11. Pound dollar looks to be potentially breaking out, but we still have to clear. We've had 4 or 5 days of strong pound dollar. I don't necessarily trust this direction. You can see the makings of a potential pattern here, right? If this is left shoulder, head to neckline, are we going to break this and actually head up into, new territory of pound strength? Maybe. That's a big maybe, because the Bank of England starts cutting rates, this goes probably sideways, right? And I don't want to force. I just think the dollar is a tough freaking trade. It's a tough trade. Good. Slugmeister says short of the pound, euro pound. Good. Okay. New Zealand CAD, I'm long. New Zealand Swiss, I'm long. New Zealand yen, stay the alignments. New Zealand dollar, we may get stopped out of this in the flex room. I'm reassessing the dollars in general. Dollar CAD, same thing. Watching this 3,600 support. If we break below 36, okay. If we hold 36, we probably range back up to 37.70, maybe 38. So I want to see if 3,600 holds first. Dollar Swiss, I'm still long. I'll still dollar cost average into this one on any pullbacks. Dollar yen, we've retreated off the highs around 162, but this thing still hasn't broken any trend lines for any major sell signal. And there's 20-some currencies. Okay. All right. I'm going to wrap it up for there. I'm going to jump over it. We'll just start the equities on demand trading room in 1 minute. Let's just jump right into it. I've got canned beverages that I'm going to tap into just to have something to wet my whistle this morning. A little LaCroix. So for those of you watching, thanks for being here today. Happy Monday. We've got a full uninterrupted trading week. Make sure you tune into more A1 Trading, see the schedule and the list of guests this week. I'm pretty sure I'll be back on. So appreciate everyone subscribing to the channel, following along with A1 Trading. If you want to subscribe to my channel, mine's youtube.com/ChrisPulver. My Discord channel, everything that I do on a day-to-day basis. You can find me here live every single day. Best place to find me is right here in the free group chat. So if you pop on in, my server is Chris Pulver Trading. So pop on in, check out the free group chat. You want to jump into any specific assets, it's all right there. You want any information on what I do for trading rooms, for education, some robots, some turnkey classes, all there under education. But best place to find me right here is there. I will say this disclaimer really quickly. If you come into my Discord channel, I do not send direct messages. Okay? My direct messages that I would send would be, you send me one, I will reply. But if you come into my Discord and all of a sudden there's a lookalike or an imposter or a scammer in a direct message that's looking like it's me, I promise you it's not me. So this is why I said just default to the free group chat. That's the best place to find the real me. Okay? All right. Let's have a good week, everybody. We'll see you soon. Thanks. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.